So imagine waking up tomorrow morning and suddenly realizing that pretty much every major decision you've ever made has been pulled by the strings of a massive, totally unseen global system. Crazy, right? Well, it's actually happening. Average households are sitting on thousands and thousands of dollars just in credit card balances alone. I mean, the house you're dreaming of buying, the car you drive, the degree you pursued, even the very job you go to every single day, they are all hooked into this invisible architect. It's a system literally designed from the ground up to keep money moving and to keep you borrowing. Welcome to This Explainer. Today, we're unpacking a pretty terrifying reality. Why so many of us spend decades busting our backs to get ahead, only to realize we're stuck running on a financial treadmill that just never stops. Okay, let's dive into this. Most of us kind of hold on to this hope that, we'll just out-earn our debt one day. We treat it like a temporary stepping stone. But I want you to consider something a bit chilling here. What if the system was actually never designed for you to escape? Seriously, what if this whole debt trap isn't some glitch in the matrix or a personal failure on your part, but actually a carefully engineered, built-in feature of the modern world?
Section 1, the first trap and when debt becomes normal. See, nobody actually wakes up one day and maliciously decides, hey, I think I'll ruin my finances today. It doesn't work like that. It always starts with perfectly reasonable, logical choices. You take out a student loan to get a good job, you finance a reliable car to get to that job, you get a mortgage for a safe place to live. But the trap snaps shut when that debt just becomes normalized. One payment quickly becomes two. Two seamlessly turn into three. Add a credit card here, a financing plan there, and before you know it, you wake up to this incredibly grim reality. A massive chunk of your hard-earned paycheck already belongs to someone else before the money even hits your bank account.
Now, what's really interesting about this slide is how it completely shatters what we call the lifestyle illusion. Let's look at two people. Person A earns $50,000 a year. Person B earns 3 times as much, $150,000. Now, society trains us to automatically assume that the second person is financially free, right? But debt has this crazy magnetic effect. As your income goes up, your spending almost always tags right along with it. So what happens? Well, the $150,000 earner buys a bigger house, gets a much nicer car, and suddenly finds themselves living a way more expensive lifestyle. And ironically, they don't feel 3 times richer. Actually, scratch that. They usually just feel 3 times more stressed out. It all boils down to this. Debt doesn't just take your money. It takes your flexibility. Section 2. The Psychology of Invisible Debt. Here's the really tricky part. The most dangerous thing about modern lending is that it's intentionally designed to be completely painless. Think about it. If you have to hand over $2,000 in cold, hard cash, that hurts instantly, right? You literally feel the money leaving your hands. But financing, it magically spreads out and hides all that pain. So people stop asking the fundamental question, can I actually afford this thing? And instead, they start asking the trap question, can I afford the monthly payment? Just that tiny little shift in phrasing has trapped millions of people, because affordability and value are absolutely not the same thing. Section 3. A system that demands borrowing. We honestly can't just blame individual choices here, because this invisible architect actually demands borrowing to survive. It's a continuous cycle. When you and I borrow money, we go out and spend it. When we spend it, businesses grow. And when businesses grow, the broader economy expands. Debt is literally the fuel keeping the entire economic engine running. You see advertisements encouraging it everywhere, banks are actively pushing it, and credit card companies quite literally give you rewards for doing it. The system doesn't necessarily want you to go entirely broke, but it desperately needs your money to keep moving. Section 4. The true cost of debt. Opportunity. So the crucial point is that most folks fixate entirely on the interest rates, but the actual biggest cost of debt is lost opportunity. Let me show you exactly what I mean. All right, I want you to imagine a perfectly normal everyday scenario. Let's say you're paying $500 every single month towards your various consumer debts. Over the course of just one single year, that seemingly manageable monthly fee drains $6,000 straight out of your pocket. Gone. And over 10 years? Boom, that is $60,000 lost. But wait, it's actually way worse than just the cash value. Imagine if that same $60,000 had been invested instead, growing, compounding in the background, building true wealth for your future. That's the devastating power of debt right there. It doesn't just consume your income today. It quietly and relentlessly eats up all your compounding opportunities for tomorrow. Section 5. The wealth gap nobody notices.
Now, this brings us to a super fascinating twist. You might be sitting there thinking, wait a minute, don't rich people use debt too? And you'd be right. Yes, they absolutely do. But they are playing an entirely different game. And this brilliantly illustrates the divide. Average consumers generally use debt to buy liabilities, things that constantly lose value, like cars, electronics, luxury purchases. Literally, the moment you buy them, they're worth less. The wealthy, on the other hand, they borrow money to acquire assets, things like businesses, rental properties, and investments.
Because assets have the potential to actually generate income, while liabilities exclusively generate expenses. So over time, what happens? One group spends their life accumulating payments, while the other group accumulates assets. From the outside, signing that loan document looks exactly the same for both people, but the long-term reality? It is completely 100% the opposite.
Section 6. Escaping the financial treadmill.
So, the big question. If simply earning more money doesn't automatically set you free, how do people actually escape this thing? Surprisingly, the real escape starts entirely in your head. You have to stop using debt to look wealthy to other people and start using your money to actually become wealthy. It's a massive mindset shift. You have to stop chasing the appearance of success and start building true ownership. The specific blueprint for this is actually pretty straightforward, but it requires fierce dedication. First, you need to relentlessly build your savings. Second, systematically reduce those unnecessary liabilities. Third, invest your money consistently. And finally, create income-producing assets. You've got to deeply understand the difference between something that costs you money and something that makes you money.
Section 7. The dark truth about debt.
As we start to wrap up this explainer, we really have to slow down and confront the darkest truth about this whole system. Because the real tragedy isn't simply that debt exists. The truly dark part is that most people don't even realize just how much of their future they've already sold off to it. Month by month, payment by payment, debt quietly and invisibly shapes your career choices, keeping you stuck in jobs you might actually hate just because you need to make that next payment. It shapes your lifestyle choices and even your ultimate life goals. This system is so incredibly difficult to escape precisely because it doesn't look like a trap at all. It just looks like normal life. But here's the good news. Once you understand the rules of this game, you can start making entirely different decisions.
And that, my friends, is where financial freedom truly begins. So I'm going to leave you with this stark, provocative choice. If someone offered you these two paths right now, a flashy luxury lifestyle perfectly financed by endless debt, or a much simpler lifestyle but with absolute financial freedom, which one would you choose? Really think about it and let me know your answer in the comments below. I'd love to hear your thoughts. Thanks so much for joining me on this explainer, and I will see you next time.